Hey traders, Akil here, and thank you once again for taking a few minutes out of your weekend to join me for another trading video. In today's video, we're going to take a look at two price action and structure-based trading opportunities, one counter trend and one trend continuation. But before we get into that, I want to give you guys a big update. You guys have spoken demanding that you stay up to date on my new ventures. So what we've done is we've created a nice little sign-up sheet where you'll be the first to know about what's coming in 2018. Just click the link below this video or head over to www.tier1trading.com. I wish I can tell you more about what's to come, but well, honestly, I just don't want to. But trust me, between Jason Greystone and myself, we've got a very delicious meal cooking in the oven right now. It's going to be great when it comes out. So just make sure you stay in the loop and you certainly won't be disappointed. So I'll give you guys a few seconds to head over to that link and get your email in there. And then we'll head over to the price charts and look at this week's trading opportunities. So the first pair we're going to take a look at today is the pound dollar. And like many other pairs, there hasn't really been too much directional movement as of late. And if you're new joining my videos, this is December, and what we've been talking about for the last few weeks is really trading starts to dry up after Thanksgiving, and the movement just isn't the same. No one's in a rush to do anything dumb before the end of the year, and so the markets tend to slow down a little bit. But there is a trading opportunity on here, maybe not the best trading opportunity in the world, but I do want to bring it to your attention. It's going to be a structure-based trade. Now, in the past, when we've talked about consolidation, I've said that consolidation often breeds advanced pattern formations. Well, it also offers some pretty good counter trend trading opportunities. That's what I'm going to show you today. Now, the difference between counter trend trading and trend continuation trading is, well, in trend trading, you're looking to catch the next extension. So you're looking to discover what the underlying trend of the market is. You're looking for price action to pull back or retrace, and then you're looking to involve yourself in anticipation of the next leg up, right? The next big move in the trend. Counter trend trading is the exact opposite. We're looking for areas where the trend may end, where the market may go into a little period of relief. And instead of looking to position ourselves for that next big move, we're looking to really just get in, get a little bit, and get out. There are pros and cons to both trading styles, as always. And of course, you can be both. It's going to take a good amount of filters, but you could have both styles as well. But what we're looking at here on the pound dollar is price action trading between two levels of structure. We can look at our highs up here around mid-September. We're looking at about 136.60s. You can see this area of consolidation right up here. And you can see also this area of consolidation down here as well. And you can see what recently has happened is price has put in what's called a bullish flag formation coming back down into the structure. Now, typically this type of formation is a sign of a bullish breakout. However, as I've been telling our traders, it's not the what, it's the where that matters. So I don't want you looking at this and saying, well, it's a bullish flag, therefore I need to get long and expect a continuation higher. Although that's what you would expect from this type of formation, you do have to be aware of where this formation forms in the market. And you're probably not looking for a breakout until, right, we violate our previous level of structure resistance up here. So we're going to look at this the same way, but instead of looking for a big breakout, I'm going to look at it as more of a short-term counter trend move. And if you've noticed what happened, price action has recently come down to previous structure support, right? We've seen a level where price action has found resistance here, found resistance here, found resistance here, right along this line, and then finally broke and closed above. And as we've come back to retest it, right, previous structure resistance has come to support or has turned into support. And you can see that price has bounced off that level a few times, putting in a current test right now. So with that in mind, right, because I always want to use my higher time frame to kind of form an opinion about the market. With that in mind, what we're looking for, right, let's go down to an hourly time frame and see what the opportunity may be. Now you can see on the hourly, right? We're right at that previous level of resistance. You can even look left, structure leaves clues. We have our support, excuse me, not resistance, support. We have our 2 levels here in the middle, and then we have our most recent test right here. And what price has done is we've come down to test that level again, and we've settled right on the Friday close. We've settled right on that area of structure. Now, if you look down at my indicator, right, this is the RSI, the Relative Strength Index. This shows me overbought and oversold conditions. And your traditional levels are 70 and 30. I like to set mine at 80 and 20, really looking for those high levels of exhaustion. And as you can see, right, we traded well below that 20 level, going all the way down to about 5.6. So we went really, really, really oversold at a previous level of structure, right? Now, at this level, what we should be looking for are buying opportunities, right? Opportunities to get long. And again, me personally, I wouldn't advise shooting for a full extension up. I would advise shooting for a brief move, maybe a move back into this level right here, 133.94 is right below that $1.34 psychological level. And you can see that, well, it's going to offer you a pretty decent risk reward. If you get involved at this level, right, stops need to go below our previous level of support, right? So our lows, our support lows are right here at 133, or 133, yeah, 133 even. Nice even handle number right there as well. So we can put stops right below the even handle number. And targets, we can look for a move, again, back up into our previous level of structure right here. And you can see we're getting about a 2-to-1 risk reward. So there's a few ways to handle that. Now, if you're a more conservative trader, this is where you want to use that 26.18 trading opportunity. So let's just say, hey, I'm not really sold on this level. I want the market to really show me that we're getting ready to reverse. This is where a strategy or a technique called 26.18 comes in handy, where you would look for price action to create a double bottom at this level. So a second retest of this level. You're looking for that second retest to hold, violate the highs of our double bottom, giving us a higher high, higher close, allowing us to predict that the market is likely to continue lower. And then you wait for the pullback, right, back into that 618 Fibonacci retracement. Let's go ahead and draw that on for you guys, right? Swing, oops, get over there. There we go. Swing low to swing high, looking for a pullback into that zone between the 618 Fibonacci retracement and our double bottom lows. And then you look for your buying opportunity after that. So it's a little bit more conservative. Now, as always, there's pros and cons to everything, right? If you're aggressive and you just buy it on the market open, obviously you have the best chance of being involved. You will not miss the move if price action just rallies straight off of our current price point. However, if price action just sinks like a ship and blows through that level of support, then you're going to be stopped out. If you're going to be conservative, super conservative, and wait for that 26.18 opportunity, well, the 26.18 opportunity may never occur. If price action just rallies right off the open, guess what? You're never going to have the opportunity to get involved. On the other hand, right, if price action decides to blow through support, well, you were never involved either, so you don't take that loss. And I get asked the question a lot, Akil, what is the best way to trade? And there is no best way. There's always a give and a take. There's always a pro and a con. You're always sacrificing something for something else. So the best way to trade is consistently. That's the best way to trade. Whatever you are doing, whether you're super aggressive, whether you're super conservative, be consistent with it. You know, that way you don't sabotage yourself by missing opportunities that you're supposed to take, or taking opportunities that skunk you out that you shouldn't have been in the first place. And when I work with traders, you know, I really try to work with the style that meets their personality. So if you have a conservative personality, it's better to take a conservative approach. If you have a more aggressive personality, it's better to take an aggressive approach, because it fits with who you are. And when you trade a style or a technique that fits with who you are, you don't second guess yourself as much. You don't sabotage your trading as much. You don't unnecessarily blow money as much. So decent trading opportunity here on the pound dollar for a counter trend trade. So again, just looking for a very counter trend structure based trade, looking for a very short move, not looking for the breakout at all. Although if you want to be aggressive and hold on to secondary targets, you know, go for it, right? follow your plan. The next trading opportunity we're going to look at is on gold, and this is going to be more of a trend continuation trading opportunity. So I'll give you guys a counter trend where you're looking for a little small move. Now we're going to talk about a trend continuation trade where we're looking for a bigger move. And let's start with gold on the daily. And I'm not sure if I showed you this, guys, if I showed you this opportunity in a previous Forex market preview, or if it was a syndicate trade. I don't remember. I do a lot of videos on a regular basis, guys, so they all kind of run together. But something we were looking for last week was for gold to break and close below this level of structure support, and you can see that we got that. A break and close below lower low, lower close would allow me to make the prediction that price action is likely to continue lower, and that would set us up for a potential trend continuation trade to the bearish side, so a pullback trade. So what we're looking for is this, again, to put it simple. We're looking for a price action to violate structure. We're looking for a retracement or a pullback, excuse me, back in the structure. And then if you're a trend trader, you're looking for a chance for the extension down. We can aim for this level, which is a previous level of structure support. We're also going to have a one-to-one measure move from our previous leg there as well. If we just go ahead and copy and paste this bad boy, you can see we're gonna have a one-to-one down there too. And I'm sure we can bring in some fibs and do some other fancy stuff to develop a much better area for profit taking. But for this weekend video purpose, I don't see any reason to go into details like that. Let's just talk about the trading opportunity, because each of you is going to trade it a different way based on your style. But as we go down to the lower time frame, once again, we're going to be able to define how we're looking to enter a little bit more. So let's go down to the hourly. Let's go down to the 4 hour here, and I'll show you what I'm paying attention to, right? So price action has put in a little bit of a reversal, right? We've come down off of a pretty decent bearish move, right? You can see price action start to settle down here, and then boom, we came back up and we actually rejected our previous level, our previous outside return here. Now, this little formation at the bottom, this is what I call a falling channel or descending channel, descending wedge, whatever you want to call it. Essentially, I look at this formation as, it's a very simple pattern, by the way. It's a sign of decreasing momentum, which may lead to potential reversal. So the price comes off of a high momentum move. Price starts to run out of steam as, the sellers start to take profit and new buyers start to enter the market because price is cheaper. And we start to see a little bit of a reversal until, sellers say, hey, it's cheap enough to get involved again, right? And that's what we want to be. We want to be those sellers. But you can see price action has come back up, and we've put in a decently high momentum move here, right? And we're starting to trail off again. Now we want to pay attention because, it was a Friday, and Friday trading is a little bit thinner on Fridays anyway. So we want to pay attention to the open here. But if we're making some predictions, what it looks like is we may be putting in that same type of, pattern formation, just the inverse of it. So instead of a falling wedge or a falling channel, we're going to have a rising wedge or a rising channel where momentum starts to slow up, and eventually we start to see some type of reversal down. And this is going to be our opportunity to get involved, especially as we come back to previous structure looking left. And when I look at this, I like to pair this with my relative strength index as well. So I like to look at price action slowing in momentum, still putting in higher highs here, but we're starting to see the RSI lose steam as well. As you can see, right? We have lower highs here on the RSI with our higher highs here in the price chart. This is called bearish divergence. So a decent opportunity here on gold too to take a trend continuation trade. And obviously there's tons of ways you can take this trade, all depending on what type of trader you are. But let's say you get an entry up here. I would have very conservative stops, put them above this level right here. This little outside return right here. Very conservative targets can be at a retest of our previous structure resistance and support right here, little structure swap area where price found resistance, broke through, found support. You can look for targets, obviously, at a retest of previous structure lows as well, going right down here. And of course, if you're a true trend trader, well, you can look for an extension all the way down to our previous level of structure support down here as well. So a few different opportunities, one counter trend trading opportunity on the pound dollar, one trend continuation trading opportunity on the gold dollar. And just want to, with these videos, I want to give you, again, each week kind of a different feel of the different styles of trading. There's no one single way that you need to trade. There's countless strategies, countless techniques, and right, any of them can be profitable. The key is you want to stick to one, you want to master one, you want to find one that works for you, something that is not only profitable, obviously, but one that you can actually do. And then you just want to be the best that you can be at trading that particular style, right? And I feel like I had an important point to go along with that, but I forgot it. I don't rehearse these videos. I kind of just click the record button and just start talking. But I feel like I should say something important here. Brain fart, guys. I lost it. Yeah, I don't know. So I'm sure I'll say it at some point, probably in tomorrow's strategy lab, or probably in a live room session or something like that. But you know, oh well, it happens. So anyway, I hope you guys enjoy your weekend. Again, make sure you sign up to the Tier 1 Trading to be on our email list, so you can be notified as soon as we start to release the big announcements that are coming soon. And I look forward to working with many of you guys in the future. I appreciate every time you guys hit that like button, each time you share this video, each time you support me in any way possible. And I really am thankful for it. So I'll see you guys next time. Until then, plan your trade, trade your plan. Good luck in the markets next week. And you guys have a great weekend once again. Take care.